स्टूडेंट्स ऑनलाइन तैयारी चैनल को सब्सक्राइब करें और बेल आइकन को प्रेस करके लेटेस्ट वीडियो देखें सबसे पहले।
Hello and welcome to online Tayari, and we are continuing with our first video, US China trade war. If you have not seen the first video, please refer to that video. Only then you can understand this video. So what we have discussed in previous video, what is the impact of trade war on global economy, and also we have seen that what US says about their why they have put tariff on Chinese import. We have also seen that what China says about that, and we have also seen that what will be the impact on global economy. So let's start with, I have taken an example here. You can see in this video that there is only 4.1% of Chinese steel import to US, and major supplier are European Union, Canada, South Korea, Mexico, and these countries have not seen any tariff on their trade, on their exports. So what is happening if USA President Donald Trump really wants to make it a case, then they might have put tariff on European Union or Canada, not China on in this steel case. But there is a case, this is a symbolic gesture that they are pressurizing Chinese government that if you are not following our trade practices, then we will put more tariffs on other products. It has a very symbolic gesture here. Let's move to now what China sees about this. So basically the first point is to remember that China is export based economy. It has not evolved into a consumption based economy. So but they are slowly moving into consumption based economy, because in the long term only this is the stable point where Chinese manufacturing can move to service based economy. So let's start about where China exports more. So 50% of Chinese export goes to Asian countries, 21% to North American countries, which includes USA, Mexico, and Canada, and then 18% to Europe, and then 4% to Africa. So they have this option, they can diversify. China can definitely diversify their export, and they can focus more on building infrastructure projects in other countries, as they are doing under One Belt One Road and also in Africa. So they are investing in those countries, and they are trying to raise their economic levels, so ultimately they can buy their Chinese products. So they have this diversification option. Secondly, China also in retaliation has announced that they will put $3 billion import on pork, apples, and a steel pipe. But basically the point is here that US is not a manufacturing based economy, and they do not export that much products. They have their highest capability in service industry, so mostly they benefit from exporting their service, as most of the companies like Apple, Google, Amazon, they mostly rely on service. And in that case US won't be that much impacted by this much trade barrier, I mean tariffs. And thirdly, this is a this is like China having a nuclear weapon against USA. What I mean by nuclear weapon, that every country has their if two countries are having nuclear weapons, they probably never use that, but they will show it as a threat, or you can say deterrence. There is a deterrence theory in international relations about that. So here China holds huge amount of foreign exchange reserve of 1.3 trillion US dollars. So what is happening right now, that China almost holds 40% of US debts, and in one point or in one go China dumps all these reserve into global economy. What will happen? USA dollars value will decline and Chinese yuan value will rise. We will see in the last slide how this is not a fair game, because nobody will win in this if this happens. We'll see in the last slide. let's now move to reality check. What the data says. We have already discussed that US has moved to service-based economy, and it might be not that much hampered by Chinese tariffs on US imports until unless they put some restriction on their service provider companies like Amazon, Uber, or Microsoft, or if they put that, then definitely US will be impacted in a great manner. Second point is that tariffs actually may not boost steel and aluminum jobs much. So this is the true case, because most of the companies now are moving into artificial intelligence and automation and technology upgradation. They do not want to invest in hiring more people. They want to automate their production line. So even in that case, if USA is able to boost their steel production in their country, there won't be much rise in jobs. And technological changes have made this industry less labor intensive. So that's the true case, that now companies will move to automation and technology upgradation rather than they will hire more people. And thirdly, tariffs will probably raise the cost of consumer products. So in this case, what happens is China has become in the middle of global supply chain. China is the major supplier of all the components, be it solar panel or be it computer parts or be it mobile parts. It's everything is produced in China, and China is producing really at a very cheaper rate. And if the USA puts tariff on Chinese products, then what will happen? Then US manufacturers, probably like mobile manufacturers, electronics manufacturers, HCL, like companies like HP or IBM, what will happen that their production cost will rise, and ultimately it will be felt by lastly by consumers, because if the production cost is rising, they will put that price on final product, and final product is be will be bought by consumers, and then consumers will be facing the higher prices. And we know that World Trade Organization has been created to solve the disputes between states and also states and companies. So here both countries can go to World Trade Organization and say that this country is not following the international trade practices. But we know that here the result only comes with unanimous vote, and it takes time to before a resolution can be passed. So that can be continued for a long time, and it can be delayed. And take for example of steel and aluminium. So what will happen that ultimately that US manufacturing steel manufacturing companies will benefit surely from this, but what they can do, US manufacturers combinedly they can raise the prices of a steel, and ultimately it will become unbearable for the buyers. And in this sense, there are buyers like aerospace industry or mobile industry or computer industry, they will be hampered, because they will be getting their product which used to they get at a very cheaper price from China. Now they will be getting in US at a very high prices. So probably they will again move to some other countries where they can produce those products at a very cheaper rate. So ultimately it is not benefiting USA. And what will be the impact on global economy? In my assumption, China will probably avoid raising tariffs on US products, but if the situation continues, then it might start hurting American service providers. We have already discussed that USA has a very strong base in service based industry, and Ch- China may start this war on their technological companies, and probably the major giant like Google, Uber, Amazon will be hampered by this. And we have already discussed this, that in this trade war ultimately consumers will feel the brunt of this trade war. And Thirdly, Chinese consumers won't be that much impacted because they have their own manufacturing base, huge manufacturing base which supplies all over to world. So they can probably reduce their manufacturing basis, manufacturing industries, but Chinese consumers won't be facing that much crisis. And fourthly, it has an international significance because China will be seen as the leader of free trade. Because China, if delays their decision to put tariffs on US products, then probably the world opinion will go in the favor of Chinese because they are not putting tariffs. USA is putting tariff on their products, so probably it is distorting the free market policy and capitalism. So probably this is the time that China will take the necessary steps to bolster their position in international politics. And further, China has also started One Belt One Road initiative, and they have also started investing in Africa. They have already invested too much in South Asia, in Sri Lanka, Bangladesh, and Myanmar. So probably they are investing in infrastructure projects to boost the other countries in order to export their own product. And lastly, US President Donald Trump has taken a very, or you can say, opposite approach in the world trade because Obama started Trans-Pacific Partnership and they have actually signed that. But after Trump came, he just abandoned the Trans-Pacific Partnership, which included 13 countries, 3 from North America, Canada, Mexico, and USA, and then 10 countries, including Australia from Asia. And they are also discussing on NAFTA trade agreement, which includes USA, Mexico, and Canada. So probably Trump is trying to have a protectionist economy, and probably it's not a good idea right now because the world has moved into a globalized phase and it is like going back. So probably they will think again, and it won't start to a larger extent. And further, the major point here we need to understand here is that China is so integral to global supply chains for many products that a good portion, but not all, of course, of the tariff impact will be passed on to US consumers. So what happens that if US consumers do not have option to buy a Chinese product, and probably it will be replaced by US manufactured products, so but their products cost will be costlier than Chinese product. So ultimately the burnt will be felt by US consumers. And we have already discussed that electronic products might become more costlier if manufacturing bases are shifted to US, and it continues the tariff on China. Is free trade better? We I have not included this matter for discussion here. I'm just included this for understanding the basic why free trade is better in comparison to protectionism or trade war. So basically, free trade, if you ask someone it is good or bad, so it depends whom you ask. So if someone is socialist, they will say no because it is a propaganda of bourgeoisie class. And if you ask a capitalist economy like US, then they will definitely say yes, this is the best thing for a global economy. But if you ask a mixed economy like India, they will say, yeah, in some cases it's good, but in some cases protectionism is good. So like defense industry or other major industries where India thinks that there is a security concern for that, they won't allow foreign investment. So what is free trade? Free trade is the opposite of protectionism, means few tariffs as possible, giving people the freedom to buy cheaper or better made products from anywhere in the world. So this is the basic agenda of free trade, but it hampers the domestic industries in a way because in the longer run even domestic industries will become competitive because uh, if the companies come to India or China. Take the example of China. So what China said, that if you want to manufacture in India or China, or produce in China, then you have to tell your trade secret or intellectual property right. So slowly Chinese companies also came to know how to produce a product, and it has largely benefited the Chinese economy, and that's why they have become the one of the biggest economies of the world. So yes, protectionism is, on the other hand, puts huge tariff on other imports. So basically what happens that, definitely for a short term period it benefits the domestic manufacturing and industries, but it is not good for the consumers because they don't have the option to buy another product which can be better than domestic manufactured products, or maybe available at a very cheaper price. And we have to make this point clear that cars, smartphone, food, flowers, free trade has brought affordable products from around the world. Yes, that's true. And because of Chinese capacity to produce anything at a very cheaper price has largely benefited the global economy. And lastly is economic slowdown between the world's biggest economy doesn't look good for anyone. Yes, that's true. For a healthy global economy, there is a need of free trade. Impact on India, there will be really less impact on India, or in the long run, it can be impacted if the trade war continues between China and USA. But right now, India won't be that much affected because India is a consumption-based economy. It has still to work on to becoming an export-based economy. So even for example, steel and aluminum, India is not one of the biggest supplier of steel to US. So, but there are some companies like Tisco or some other countries where they have invested in other countries like Britain or European Union. So they might be impacted if US puts tariffs on European countries also. And India has to be very careful because if they choose either side, then the other side negative will probably see India as a negative partner. So India has to walk on a tightrope in this because it can be caught in crossfire. So India has to make it clear that it is for free trade or protectionism, but it has to manage both because they cannot lose China and they cannot lose USA also. They both have different beneficial factor for India. And as India in the last year, what it did to protect their domestic industries, they imposed an anti-dumping duty. What is anti-dumping duty? So imagine if a country is producing on a large scale at a very cheaper price and it exports to some other countries, and Indian companies are not able to produce at that much at that price. So what will happen ultimately? Indian companies will be wiped out and Chinese products will be available in the market. So, as it is already true that most of the products are now Chinese in India because Indian companies are not able to produce at that cheaper prices. So, in that cases, India sometimes take the necessary measure to save their domestic industries, and that's why it imposed anti-dumping duty on 90 plus Chinese products. And lastly, Indian economy is primarily based consumption-based economy, opposite of Chinese export model. Thus, there could be little impact for India as for now. But in the future, if the trade war continues, then India can be also impacted negatively by this. And as I have told you that we will discuss what happens if China sells its dollar assets. So we know that China currently has 1.3 trillion US dollars in their foreign exchange reserve, and it almost owns 40% of US debt. So in this case, I will discuss only one point that suppose that China, what it does, it dumps their entire dollar asset in the global market. So what will happen? Dollar's value will decline and yuan's value will rise. But here the problem is that if the yuan's value rises, then China will lose its competitive advantage, and which has been a benefiting factor for the China for almost 3 decades, and they do not want to see that, and that's why China keeps to continue to devalue their currency. And what will happen to US? Yes, the foreign exchange Federal Reserve Bank will run to buy as much dollars as they can, but it won't stop their decline in US dollars value, because most of the countries will be buying yuan, and more of the countries who have earlier has foreign exchange reserve in the terms of dollar, now they will also start dumping in the global market to buy Chinese yuan. So in that case, you can see the cycle will continue, and ultimately will be China will be negatively impacted because their competitive advantage will be lost. And for USA, yes, its currency, if their currency devalues, then what will happen? Their currency value in the market will be declining, and it will be forcing the US to it will be forcing the other investors to move out from US, and it can have a negative impact on US economy. But ultimately in the long run, both countries will stabilize and their currency will actually show the real value once China stops devaluing their currency. So that's it. Thank you very much and best of luck your preparation.